Today we'll go back to the normal format that you're accustomed to because I do believe the sector rotation theme has largely played out. And remember, the theme of sector rotation is not bearish. A bearish move in the market would be if money was selling stocks to leave the stock market, which means that money is coming out of stocks and going somewhere else, whether that be money markets or the bond market or anything for that matter. But a sector rotation means that some stocks are getting sold in favor of buying other stocks, and that is a healthy thing for all bull markets that become very narrow in market breadth. And there's no way you want to see all of the money only going into 7 to 10 stocks. And now we see this bull market starting to broaden out because we are now getting participation from the Dow Jones, the industrials, the financials, and even the small caps. So we nailed that sector rotation, got out of all of the tech companies, and made very good profits in the small caps during that very powerful bull rally. And now when I look at the charts, I don't want you continuing to think that that theme has to continue to play on. Once that money moves, it is likely going to stay put, and then the rest of the market can catch up, and a lot of these pullbacks are going to bring in a lot of fresh blood and a lot of fresh money into the market, which is very, very healthy. Think of all of those people that wanted to get into Nvidia on a dip. They now have a dip in Nvidia. Anybody who wanted a dip in AI companies or AI stocks is now getting an opportunity to buy lower. And all of the greed from those people who never locked any profits is getting punished, and they are probably panicking because they didn't have a plan for when those stocks turned around and started to come down. So I just wanted to be very clear, sector rotation is not bearish, it is very bullish, and that is why I remain bullish on this market. And today on SPY, we did break down below 556, which I did tell you was a risk off indication, but I don't think it's going to stay risk off for very long because we're getting close to risk on levels at a rising 20 daily moving average and a retest of the breakout at 548. So today I want to delete some arrows and I want to redraw my preferred scenario and then a backup plan. And my preferred scenario is that we're either going to find support here at the rising 20 daily moving average, or we're going to pull back just a little bit more. And that pullback would take us towards 548 before we started to bounce higher towards 562. That would close the gap, and then from there we could continue to push for new all-time highs. Now, if I'm wrong, you need a backup plan, and your backup plan would be to get risk off below 548. So because this is a bull market, you could be confused on why I said below 556 was risk off, but now I'm saying it's risk on at 548, and it's just as simple as the fact that it's a bull market and a bull trend. You want to focus on buying dips in bull trends. So in my opinion, it's a lot easier to get risk on at support levels, knowing that below 556 we would likely go lower, and then this will help you understand on where you should be taking on risk and where you should be looking to add to long positions. Now, if you disagree with me, that's completely fine. I'm not saying you have to agree with me. If you want to continue to short the market below 556, that's completely fine. I see absolutely nothing wrong with that. I just think the highest probability chance is that we'll go higher, and that's why I think long trades are still better. So don't worry about what I'm doing or what I'm saying. You follow your own trade plan. You know your own risk tolerance. You do not need to do anything that I'm saying or anything that I'm doing or anything that I suggest doing. I'm simply giving you my opinion and where I think the critical levels are, and that's probably why you're here to begin with. So don't get mad if you don't agree with me. It is going to be just fine. So right here at 548, that's where I'm looking to take on risk, and I do think we could get a strong push. If we don't get a strong push, look for that rejection at 556, and that could be another lower high, which could be a warning sign that we're going lower. On the NASDAQ 100 triple Qs, we were down 0.47% today, and I'm not changing anything about this arrow. I like this arrow a lot, and you can see today we did wick below the support, which is where I thought we would hit, right around 478 to 480, and from here I think we are going to push higher towards 493. Now again, you could say you could stay risk off and you could keep shorting the market below the breakdown at 491. That is completely fine. Again, there is nothing wrong with that trade plan. It does make sense, and there is the possibility it is the correct trade, but I am going with the lowest risk, high probability, which is buying the dip down here at this support zone that I like, knowing that if we break down below it, there is going to be this chance that we come down here and fill this gap at 468. And remember, that gap is a 100% fill rate guarantee. I just have no idea when it's going to fill, which means we could actually go up to 493 and fill that gap and then go fill the gap at 468. And in that case, if you kept shorting, you could still make money. You're just going to have a little bit of a wild ride along the way. So once more, I will remind you, I don't care if you're shorting or going long. If you're going long, your risk level is down here right around 478. And if you're shorting, your risk level is this breakdown at 491. Below 491, it is possible we are going lower. and that lower price would be 468 on a break of this support. On the Dow Jones, we were down 1.26% today, and we got very close to the price target up there right around 415, and we did start to pull back, and we are back inside the Bollinger Bands because we were getting a bit overextended and we needed a bit of a cool down, and this cool down looks like a buying opportunity because we pulled back to the support zone right around 407. This is also the rising daily 5 EMA, so I do think it's possible to buy the dip in the Dow Jones right around 407, knowing that if 407 breaks, we are looking for a gap fill down here right around 403. So 403 and 407, I think you can buy the dip here. And actually, this is going to remain bullish while we have the bull breakout above 400. So the Dow Jones really just looks like buy the dip the entire way down. Get as low as you can, obviously, for the best risk reward ratio. And that price target remains 415. And I will up this price target. I do think we're going to 420, but I'm just going to say short term here. And short term, I think it's likely we bounce off of this support zone and go to 415. On the Russell 2000 IWM ETF, we were down 1.93% today. And just like the Dow Jones, we were really overextended outside that Bollinger Band. We came back down inside the Bollinger Band. We closed the gap at 218 and we're sitting right on top of the daily 5 EMA. And this again looks like a buying opportunity, knowing that if we continue to go lower from here, you need to manage a risk at support at 214 and a gap fill at 211. So the small caps, I do believe, are still going higher. You could get a low risk buying opportunity as we start to pull back. And the price target I'm looking for is still up here at 228. On the ARKK ETF, we were down 3.84% today. And once more, a little bit overextended, coming back down towards support, and this support is going to be right around 45.7 to 46, and we are getting a bull trend here, especially if we can get back above 47, and this is a risk on appetite indication. I don't suggest trading ARKK, but if you want to stay bullish above 45.7, that is completely fine, and that is your risk level. On the VIX, we were up over 10% today, and the VIX did close out above 15, but I'm going to stand behind what I said, that this is just a pullback to support within a bull trend, and I do expect the VIX to start crushing from here back down to 13 as we see the bull trend bouncing off of support and continuing higher. If I am wrong about my prediction, we will lose support and the VIX will likely continue higher, but that is the least probable scenario from my prediction, and that means the VIX will likely start to crush if we can bounce off support. So just pay attention to those critical support zones in the indices. On Bitcoin, we're currently trading just above 63,700, and we are getting a pullback to this breakout and rising 5 EMA right around 63,000. And I do think from here, if this support can hold, we will start to bounce higher towards 67,000. So I'm going to delete these old arrows and give you this new one, knowing that if we can't hold this breakout above 62,000, we will likely come back down towards 60,000. On Nvidia stock, we were up 2.63% today, and we fully closed this daily gap here at 116. And if you remember back, I told you there was going to be this possibility that Nvidia had a lower high rejection and started to come down to fill these gaps. And today we did finally close one of those gaps at 116. And if we break down below 116, there's a good chance we'll go fill a gap just below 107. However, do not assume it has to happen. It is possible this was the higher low and we're ready to go higher. And we now do have a gap to the upside at 124. So it is possible we do go a bit higher. And then if we get a rejection and break 116, that would be the bearish scenario that we're going lower. But if we just continue to break through that gap fill and go higher, we could push to the top of the range yet again in the 130s. So I'll leave these new arrows on the chart and delete the old ones. You are looking for a push in the short term higher towards 124. If we break through 124, you're looking for a push to the top of the range yet again. And a rejection from a lower high could still take us lower, and we could go through a deeper correction. On Tesla stock, we were up 0.29% today, and this chart is looking very nice because I told you after this powerful bull trend, we would need to cool down and get some consolidation. And if you look at this, it looks like a really nice bull flag starting to develop, which means we are likely going to get a breakout of this flag very soon. And a break to the downside would bring us down to close a gap right around 231, and a breakout to the upside would likely bring us higher towards 289. So the risk reward here for the bulls is looking very good as long as we can hold above this support at the 240s. And if we hold above 240, I do think we could go on a very nice push towards 289 and possibly even all the way up into the 300s. If we break below the 240s, look out below because we will likely fill that gap and test that support right around 230. On Apple stock, we were down 2.05% today, and I like this chart as well because we are now coming into support at the rising 20 daily moving average, and we do have a gap to fill up here right around 232. So I like the possibility that Apple is coming down towards support, going to bounce and test the top of this range, which is going to take us into the 230s. And if we could break out of the top of that range, I do think we'll see new all-time highs into the 240s. For this, I like staying long above 218 and the rising 20 daily moving average right around 221. So jumping back over the S&P 500, the sector rotation is likely complete, and I do think that was healthy for the market, especially if you're a bull, because we needed to see that money moving around and to confirm more bull trends in the whole entire market, because we don't want this market only sitting on the backs of 7 to 10 stocks. We have participation from the Dow Jones, the small caps, and all of the other sectors like the financials, industrials, and healthcare. And we're even seeing bullish activity in ARKK and the biotech sector. So this does look like a risk on bull market, which means buy the dips and use the pullbacks as opportunities to get low risk entries. And remember, low risk does not mean you can't lose. If we start breaking through the risk levels, you need to manage risk and keep those losses small. This is still a bull trend until it's not, and right now I see no reason to say that this is still not a bull trend. I think we are going to put in a higher low and continue to push higher from here. So manage risk accordingly, have a solid trade plan, be prepared for both scenarios, and then let the price action on the chart do all the talking. If you want access to all of my trade ideas, my technical analysis, and my intraday updates, that's in my Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.